Yes, good morning, students. Myself, A.Gopala Krishna. Today, I would like to explain the concept depreciation in the subject financial accounting. First of all, I would like to explain the meaning and definition of depreciation. Depreciation means it is a continuing, permanent, and gradual decrease in the value of the depreciable fixed assets due to various reasons. Generally, every business person has to purchase certain resources or fixed assets which are used to generate revenue. Those capital expenditure which is incurred for the purpose of purchasing fixed assets which are helpful to generate income for the business entity. Those fixed assets are nothing but treated as capital expenditure during the period. By using those fixed assets, the value of those fixed assets would be decreased every year permanently and gradually. So, in other words, the cost of assets should be allocated over its useful life of the assets, means where the capital expenditure which is incurred should be apportioned on the basis of concerned asset consumption during the period or its lifetime. So next one, features of depreciation. Depreciation is nothing but decrease in the value of fixed asset, and also the loss of value of asset due to passage of time or obsolescence. Depreciation is nothing but it is an ongoing process until the end of the life of the assets. So depreciation is always provided on depreciable fixed assets only. Depreciation should not be provided on non-depreciable asset like land, and also it should not be provided on current assets. So the basis on which the depreciation should be provided is always to be treated as non-cash expenditure. Next thing, objectives for providing depreciation. We have 5 major objectives for providing depreciation. In that 5, the first one is to calculate or to ascertain the correct profit or loss during that period. As early I said that depreciation is non-cash expenditure which is to be a revenue in nature, so it should be debited to profit and loss account. That means that portion of the fixed assets consumed during the period should be treated as revenue item and it should be debited in profit and loss account as non-cash expenditure. Number 2, the second objective, to find out true financial position. So as we know, balance sheet reflects the financial position of the business entity. In that balance sheet we have fixed assets. Those fixed assets should be disclosed at their book value of the asset after deducting depreciation only. And third objective is to find out correct cost of the production. While we are using fixed assets in cost of production, the portion of the asset which is used to make that product should be added to the cost of the product. And fourth one is for replacement of asset. This is one of the major objectives for providing depreciation. After end of the life of the asset, we have to purchase or acquire another asset. For that purpose we need some funds. So for every year we should set aside some amount of depreciation for the purpose of replacement of assets at its end of the lifetime. And fifth one is to comply legal requirement. To follow certain acts like Income Tax Act, Companies Act, we have to provide depreciation. It is mandatory. Next one, causes of depreciation. Generally we have 5 or 6 main causes for depreciation. In that 5, First one is wear and tear due to use. Wear and tear is nothing but deterioration and the fall down of the value of the asset due to its usage. And second one is expiration of legal rights. Some categories of assets lost their value after expire of their legal validity. After completion of the contract lifetime, the value of the asset will be deteriorated. And third one is obsolescence. Obsolescence means out of date. Some technological reasons or some changing in trends, the value of the fixed assets will be automatically fall down. It is called obsolescence. And fourth one is abnormal factors. Due to various abnormal causes, the value of fixed assets should be decreased, like earthquakes, fire accidents, floods, etc. Next one. Other similar concepts in depreciation, nothing but depletion. Depletion is used with regard to natural resources like oil wells, mines, where when natural resources are extracted and the stock value is reduced, this reduction is termed as depletion. Methods of calculating depreciation. Next concept. Generally, we have nearly 11 or 12 methods, but as of now, I would like to explain four major methods. In that four major methods, first one, straight line method of depreciation. It is a traditional method of depreciation. This method derives its name from a straight line graph. It is also known as fixed installment method. Under this method, an equal amount is charged for depreciation of every fixed asset in each accounting period. That means the uniform amount is charged until the assets reduce to zero or its salvage value at the end of its lifetime. For calculating annual depreciation under this method, we have to use certain formula like cost of the asset minus salvage value divided by useful life of an asset. These three are also called elements of depreciation. Here cost of the asset means total cost of the asset. Total cost of the asset means cost of the asset acquired plus incidental charges which are incurred at the time of acquisition plus installation charges. These three expenses are commonly treated as total cost of the asset. Next thing is diminishing balance method. This method is also known as reducing balance method or written down value method or declining balance method. Here, a fixed percentage of depreciation is charged in each accounting period on the net book value of the asset at the end of the lifetime. Here, this method is based on its assumption that high amount of depreciation should be charged in early years and later on the value of depreciation is decreased year by year. Next thing, annuity method. This method of depreciation considers the cost of the asset also the amount of interest lost on that capital expenditure. This concept should be followed on the basis of that if the amount of fixed investment is spent on the purchase of the asset invested elsewhere, it would have been earned certain amount of interest which is called opportunity cost. Here, not only the cost of asset should be allocated, but also the amount of interest on it should be allocated over the useful life of the assets. Here, we are using annuity factors for calculation of depreciation. This method is suitable for long-term leases. And the next method is depletion method. In extraction and mining industries, have fixed assets like mines, quarries, wells, and extract natural resources like coal, oil, timber, metal, salt. For such assets, depreciation is calculated by using the depletion method. Depletion is nothing but allocation of the cost of natural resources during the period based on the rate of consumption of natural resources. In order to determine periodic charge, we need to follow certain information regarding that calculation of depletion method. In that one, first of all, cost of natural resources, also called depreciation base, we need to find out. And second thing is expected total reserve available for extraction that expressed in particular unit of measure like tonnage or cubic feet. And the most important thing is quantity of resource extracted in that period. So here we complete the concept of depreciation. Thank you students.